All right, do it.
All right. Good morning, everyone. Happy Monday. A very happy Monday for me in since a very long time. We have seen some amazing things from an interest rate standpoint over the last couple days of the trading and into today. Now, whether or not this lasts or not, that has yet to be determined. But the big news is from an interest rate standpoint is that I actually was able to quote a 5.99% interest rate. Whoop, whoop, for a purchase last week. So we are going to be heading into the fives as we move through this month. Some of the things that are contributing to that, we talked about before, the unemployment rate. We were at 4.1, we were at 4.1, we were at 4.1. Well, the numbers came out last week and the unemployment rate is now at 4.3. That's super important to what happens in the market. When that happens, it creates kind of a mistrust in the stock market. Stocks levels go down, mortgage interest rates go down. The 10-year treasury bond goes down, which means that we see an improvement in mortgage interest rates. So although the unemployment news isn't exactly stellar, it is great from a mortgage interest rate standpoint. So what can we talk about now and what can we predict in the future from a rate standpoint? Once those numbers came out, we talked about last week, of course, the ADP jobs numbers too being lower than expected, job creation numbers being lower than expected. That combined with the unemployment rate made the market go a little bit crazy and kind of pushed on the Fed to say, do we do an emergency meeting to lower interest rates? They did not take advantage of that, did not do that. However, they are still predicted, and it just gives strength to the September meeting and them dropping that interest rate. Again, as a reminder, the Fed interest rate does not directly relate to mortgage interest rates. However, it does influence the 10-year treasury bond, which is what mortgage interest rates are based on. That 10-year treasury bond, I'm happy to report, is at 3.76 this morning, which is under 4%. They talk about this term called a Fibonacci level within the financial term or within the mortgage interest rate term. Basically, what that means, there is a little math sequence to it, but what it means is that if you get below this level, there's a little bit of resistance where the interest rates kind of just hit that level and just top out, and you don't see as much volatility. And so it's just like this line of resistance is basically what it is. But we are under that 3.919 Fibonacci level, which is great news. And we're well under it, which is awesome. So things are looking good from an interest rate standpoint. I am telling you guys, so come September, we're all going to be extremely busy. So I'm hoping that, that 5.99 tends to go to 5.75, maybe even 5.625 here in the coming weeks as we head into the September meeting. So with that being said, creative ways to help your buyer go non-contingent when they are purchasing a home, okay? Not a lot of people know this, not a lot of lenders are able to use this, but it is an opportunity to help your clients go non-contingent when they are making offers on a property. Normally, when you go non-contingent, of course, as a lender, we have to count both mortgage payments in the qualifying amount for the borrower. There is an opportunity or a guideline in a conventional financing situation where if the client has their home listed for sale and they have an accepted purchase agreement on that home, as long as the buyer of that home has mortgage approval, mortgage lending approval, that loan or that closing or that sale of that property can happen after the purchase of the new property. So for example, let's say today I had a client get an accepted purchase agreement on a home. They're closing September 1st. They don't have their home on the market, or they have their home on the market and they do have a purchase agreement on that home. However, that purchase agreement on their home isn't going to close till September 15th. As long as the buyer has that mortgage approval, we do not need to include that mortgage payment in the ratios for qualifying. It is a opportunity. It's a trick that I use quite often when it comes to helping people get non-contingent offers on homes that they're going to purchase. It's a great way to help people kind of strategize through things and put an opportunity in place for them to have a more competitive offer. That's going to be very important. Obviously, non-contingent offers are going to be extremely important in the next coming months as we kind of see those interest rates drop and people's interest in home buying and home ownership starts to increase and tick up. So that's one opportunity. There's other ways that we can talk through what it looks like to grab the equity out of your home before you sell it, either by a home equity line or a bridge loan, things like that. But it's just really about being creative so that that non-contingent offer can happen as we're seeing more competition in the market, and as we're going to see these interest rates start to lower and people start to have that increased interest in that home ownership. So myself, we are preparing on our end for, just kind of, I guess you could call it a little bit of madness that's going to happen as these interest rates come down. We have people that are currently looking for homes, making offers. And the one thing that is resounding when they do make offers is, when should I have my closing date so I can take advantage of the Fed rate drop, in interest rate? And we are about 45 days away from that meeting. So if we do a 45-day or a 60-day closing, from here would be the ideal time to make sure that we can take advantage of that lower interest rate right before closing. So as always, if you do have questions, always advice is free, but it's definitely the time to put a strategy towards, when am I closing? When do we expect that Fed interest rate to drop, and how can we best help our clients?
I love it. I was just making notes on that exact thing, Nikki. If you can talk more, because it's been a few meetings where you had talked about, well, first, we can go back to for every interest rate point that it drops, how many 5 million new buyers enter the market. So we'll want to talk about that. But also about when you lock in. I know that a lot of agents are still under the traditional thought process of when we need to lock in and not relocking. So I'd love for you to revisit that, so that when I post this out here as well, it will remind a lot of agents and educate agents that aren't aware.
Yes. So on the lending side, a locked in interest rate basically has to be locked in for a number of days to get you through the closing date or to the closing date. So for example, today is August 5th. 30-day close would be obviously around September 4th, September 5th. And we can lock that interest rate in for 30 days to get us to the closing date. There's 30-day locks, 45, 60, etc. So when we're talking to our clients and we're putting a strategy towards things like this, we have opportunity to lock in, for example, today. And if interest rates drop before closing, we can do what's called a relock and bring that person down to the market interest rate. So for example, today, if I said to a client, okay, I can lock you in at 5.99% and you're closing on September 15th, if the interest rates drop at least 0.25%, preferably at least 0.5%, but if they drop at least 0.25%, you can do what's called a relock. In other words, bring your interest rate down to the same rate as the market, because you locked early and you were able to ride the market or the benefit of the market. Now, keep in mind, it doesn't go the opposite way. If interest rates go up, you're protected. So it's only really an advantage to the client to say, okay, I'm comfortable at 5.99. If it goes down to 5.75 or 5.625, I will be elated, but I'm comfortable at 6 or whatever that number is. So those are really the discussions that we're having with clients. Right now, like I said, a lot of people are requesting 60-day closes just to get through that Fed meeting on September 18th to make sure that if they lock in today and the interest rates drop, they are able to take advantage right before closing. So just some things to keep in mind as you work with the lender and as you work with your pre-approvals and say, okay, where are you at with everything? What is your ideal closing time? Things of that nature. And we can work together to make sure that happens for the client. And then the other thing that I was going to say is to keep in mind, if you have clients that are currently pre-approved, have them recheck with their lender where their interest rate is today so that you can see if they have more buying power, because that can always happen as interest rates go down as well. So that's always a good check, keeping your clients pre-approval updated as the mortgage interest rates start to have some volatility and start to lower.
Also, as usual, a really great tool to reach out to those buyers on the fence or who have been waiting since last year or earlier this year, waiting for exactly what's happening to happen, engage them right away, talk about what Nikki just talked about, say now is the time. And I want to make sure as agents, with all the uncertainty that's unfortunately happening and misinformation out there, that we're showing up with confidence and speaking from conviction that this is it. We can help them. We have the business partners to help them. We need to more than ever elevate how we speak and how we show up. And Nikki, if you want to, again, like you do often, share in the chat all of your social medias, because Nikki has offered all of her social media. She shows up at a very high level and educates every day, where you can share her information on TikTok. You can duet, you can stitch, you can do all of the things to show up and really educate and, be the voice of reason in a world that has a lot of
Yes.
information.
Absolutely. Absolutely. And I did do the TikTok already this morning. So that is out there and available for you guys to share. It talks about the non-contingent kind of tricks and how we can help the client. So if you want to share that or you want to stitch it or whatever, you can definitely do that. It's out there and available for you already.
Perfect. Thank you. Great. Any questions for Nikki? She's such a wealth of information. I appreciate it.
Yes.
I think it's just, yeah, great information. Thank you so much.
Absolutely.
Hi, Mel. Yeah, I
Thanks.
think the biggest thing, you guys, is taking this information and sharing it out there, because people are reading the news today. And, so you can hear one side or the other, depending upon where you're reading. And if it's pertaining to real estate, which is our area of expertise, being the local experts of choice, that should be the part we, focus on and get information and send it out there, because there are people that are hearing different things, but it's not necessarily pertaining exactly to real estate, but they're trying to figure out, how does it pertain to real estate? What should they do? There was an interesting post today by one of our local financial advisors, and he is also a real estate investor. So he happens to, know a lot more about real estate investing than I think a lot of just general financial advisors do, that's not their area of expertise. And, one of his first comments was, number one, not to panic. You don't go sell everything because of one thing happening. But number two, from his personal perspective, this would be one of the best times to buy real estate. And so, don't panic and sell all your stocks. At the same time, know where there's opportunity. And one of the things that happens when, like Nikki shared, the stock market does go down, that typically means so do interest rates. So, if you sold somebody a property in the last, year or so, and you remember their interest rate was a little bit higher, getting them in contact with a loan officer to potentially look at refinance. Remember, it's not always about getting the deal. It's about serving the client, because when you're on the phone with them, who knows who they're going to refer to you, or what, sort of opportunity could come your way. So I would literally spend my days just being on the phone, whether it be talking about, did you hear what's happening? Here's what that means. What's your interest rate? Do you know somebody that you could talk to see if it makes sense to refinance? Or, maybe it makes sense to buy a property. There are people that are choosing to pull cash out of the stock market and go put it in real estate instead. We still know that there's an inventory shortage. So regardless of what's going on, people still need housing. And not everybody's going to be able to buy. So rental is still, a long-term rental is still a good option if you can get a property at a good price, which in most markets you see prices leveling out now. So not as crazy pricing. And if interest rates go down, yeah, it could be a really interesting time to buy real estate and put your money in something else other than maybe the stock market or things like that. So I just think it's an interesting time. And whenever there's things like this that happen, it should just be, how do I go into my database and start making phone calls and start asking people what they need, who they need referrals to, what are they thinking, what questions do they have, and then going back to those buyers that maybe have been sitting on the fence. Absolutely. That's the obvious one. But, people that even were thinking about, buying a year, 2, 3 years ago, who knows what they've done? They probably haven't bought if they didn't back then. So if they were priced out when it was a crazy market and then interest rates went up, this could be a time where they aren't necessarily going to be priced out and interest rates are better. And so finally they might be able to enter the market. So get deep into your database, go back years in your leads if you have to me. When you've got anything like this to talk about, what an easy way to make, to go ahead and make the phone ring by making posts and asking people to call you, and also to just be reaching out to people. So that would be my go-to today if I were an active real estate agent. And this is, by the way, recorded, and you can find it on Angie Gerber's YouTube channel. So just, Angie, do they just search for your name on YouTube?
Yep, AG Coaching, Angie Gerber, yes.
AG Coaching, Angie Gerber, just type her in YouTube. You can go in and watch any of these past recordings, but specifically today, if you want to watch it again so that you can write down talking points and then go out and do your own video. If you don't want to do a duet or stitch, if you want to kind of make it in your own words or just for talking points when you're calling. This isn't a very long call. We do that on purpose so that you can go back, watch it if you need to, make some notes, and then go do something with it. The whole point of the Monday call is to get into action, because execution should be the new goal. If we don't get ourselves into action, we can't reach any goals. So get out there and talk to some people.
Wonderful. And Cari, do you want to share, I don't know if you're doing it or if you're already started the new Facebook page that you're looking at?
Yes, so I have somebody helping me start it because I want it to be very organized. I feel like this is going to be probably a growing group, so I want it to be done correctly, and that's not my area of expertise. So this week I will have the Facebook group up. If you want to be in it, go take a look at a recent post I put on Facebook, and please comment there so I don't lose sight of who wants to be part of it. All you have to do is just say me or raise your hand or something underneath that post, and I'll make sure to add you. You know, here's the thing, there's so many different, Facebook groups out there for real estate professionals. And the majority of them have gone extremely downhill, especially probably in the last 6 months to a year, to the point where you can't even find really valuable information anymore. It's just simply people ripping on each other and arguing, which does nothing but distract us and put us in a negative mindset, which is absolutely going to detract us from our goals. And I've had this on my heart for almost 2 years now to do this, but I never felt the timing was really right. And there's a lot of competition with all of these groups. So I kind of just let it go. Well, now I know why. I feel like right now is the right timing. And people just needed to get sick of what they were involved in before they were going to look at something new. Because when you're in so many groups, the last thing you want to do is join another group, but people are leaving those other groups in droves. And at the beginning of time, when those groups first started, they were very valuable. I was part of many of those. And so I know we can create something that's valuable again. For connection, for community, for referral partners. We'll bring people who are like-minded and, related industries that are willing to not spam and bring value. So Nikki, that might be something that you'd be interested in as well. And we'll get a few different, multiple people. The whole point though, being that there will be some, direction, and then there will be some, somebody that's actually going to pay attention to what's happening, and there will not be anonymous posting. If we can't say something that we put our face to, then we don't say it in that group, because that's where all of this kind of yuckiness is coming from. So I would love for you guys to join for sure. Go look at my Facebook post, or even I think I posted on Instagram. Wherever you see the post, just please do that, or DM me or text me if you might. Just get involved, get in touch with me somehow so I don't forget you. And then that will be happening this week. Additionally, every Wednesday moving forward at 1 o'clock Eastern. So that's 12 o'clock Central for those of you on the call in Central. And then of course, 10 a.m. Pacific, we're going to be doing a call with my business partner, Rich Tomasini. It is going to be production focused, as well as taking advantage of all of the things at EXP. We need to be diversifying. We need to know what is available for us. We're going to have guest speakers. We're going to have panels. It's going to be very organized. It's going to be more like a podcast show versus a Zoom call, but it's going to be interactive. And we've been working on this for a few months. It's going to be, we right now probably get 50 to 100 people to show up, but I think we're going to have a really, really great group. It's open to anybody, but really we want people who are serious about sticking in real estate and riding this wave and taking full advantage to be involved in it. We have a work chat here in Workplace if you're with EXP that you can be involved in, and we talk outside of those calls. And there's just some really good things going on, people lifting each other up. And it's typically some of the most serious people that are out there still selling real estate at a high level. And so if you want to surround yourself with those people, you, by the way, don't have to be that person to surround yourself with those people. Please let me know. I'll add you to the work chat. Add you to the calendar invite. That is this Wednesday, 1 Eastern, and Leo Perea, who is the CEO of EXP, is going to be on talking about some pretty important stuff to kick off our new Wednesday calls. So that is a different Zoom link. So you have to reach out to me if you want to be on that calendar invite or in the work chat. I think most of you on this call already did. So thank you guys for letting me share about that. Some really good stuff. If nothing else, you take 20 minutes on Mondays. If you can take 45 minutes on Wednesdays, personally, I think right now you need that time to educate yourself. Just plan for it. It's part of your job description. Don't plan an appointment over it. Even if you're en route to an appointment, that's okay. Just be on your phone. I do believe that you have the time to dedicate. It's just prioritizing what's most important. You can't do everything, but you can do some things. And I would say that these calls are things that, at least right now, as we're navigating all the changes, would be really important for you guys to be on consistently. So
100%.
thank you for showing up consistently for us as well. And Angie
Absolutely.
on this call as well to lead it. We really appreciate that. It makes a big difference. So.
Well, it's just like anything, like I tell my son who's in baseball, 15 swings a day. Think about how much further along you're going to be. You grab dumbbells, you do 20 reps a day, how much further along you're going to be. If you show up in these calls and you're part of the very few that actually look at education and want to show up and want to learn and want to get the right information and want to educate others, you're going to very, very quickly rise to the top. So it is our job, and I love that you say that, Cari. This is our business. This is our profession. Let's show up as business professionals and be the top 3 to 5%. It's not hard to be there. Just show up and educate yourself. Absolutely. I love it.
Yes.
Good. All right.
All
Anyone
right.
have anything else?
Appreciate you guys. Thank you so much.
Thanks for always coming on. We appreciate you guys. Have a great start to your week. Get out there and find Angie, find Nikki, create your own social media content, and hopefully I'll see you back here on Wednesday.
Thank you.
Bye, everyone.